Imagine two people, both buy the exact same life insurance policy. Same coverage, same company, same health. But one of them pays $14 a month. The other pays $83 a month. Over time, that difference becomes tens of thousands of dollars. What's the only thing that changed? Their age. In this video, we'll break down the best age to buy life insurance, exactly how much waiting costs you, the mistake most people make, and the one strategy that locks in the cheapest rate for life. Here's the brutal truth about life insurance. The younger you are, the cheaper it is. Insurance companies price policies based on risk, and risk increases with age, health problems, and lifestyle changes. A healthy 5-year-old statistically lives far longer than a 5-year-old. So insurers reward younger buyers with extremely low premiums, and here's the key. Once you buy a policy, your rate is locked in, even if you get older, even if your health changes, even if insurance prices rise. Let's look at a real example. A $500,000 20-year term life policy for a healthy non-smoker. At age 25, the average monthly premium is about $15 to $20. The total cost over 20 years is about $4,000. Now look at age 35. The average monthly premium becomes $28 to $35. The total cost rises to around $7,000 to $8,000. Now age 45. The average monthly premium jumps to $70 to $90. The total cost becomes about $18,000 to $21,000. And at age 55, the average monthly premium can be $180 to $250. The total cost can exceed $45,000. Same policy, same coverage, but the price difference is massive. Waiting 20 years can make insurance 10 times more expensive. So if it's cheaper when you're young, why don't people buy early? Because most people think, I don't need life insurance yet. They assume life insurance is only for married people, parents, or homeowners. But the smartest buyers understand something different. They aren't buying it because they need it today. They buy it because it's cheapest today. Life insurance is one of the few financial products where waiting guarantees a higher price. Here's the strategy many financial advisors recommend. Buy a small policy early. For example, at age 25, someone might buy $250,000 in coverage for about $10 to $15 per month. That locks in a low-risk profile. Then later in life, when responsibilities grow, they add more coverage. This approach is called laddering policies. For example, age 25, a $250,000 policy. Age 35, add a $500,000 policy. Age 40, add another $500,000 policy. Instead of buying $1.25 million all at once at age 40, you spread it across cheaper years, and the savings can be huge. So, what is the best age to buy life insurance? The honest answer is, as soon as you have income. For most people, that means somewhere between 22 and 30 years old. Why? Because you're likely healthy, young, and low risk, which means the lowest premiums you will ever see. But age isn't the only factor. Health is just as important, and health problems often appear suddenly. Things like high blood pressure, diabetes, heart conditions, and sleep apnea. Even being slightly overweight can raise premiums. Here's the scary part. Once you develop certain conditions, insurance can become 2 to 5 times more expensive, or sometimes denied completely, which is why people who buy insurance young are protecting against something else, future health risk. When most people talk about buying life insurance early, they're usually talking about term life insurance. Term insurance is simple. You pay a fixed monthly premium for a set period, 20 years, 25 years, or 30 years. If you die during that period, your family receives the payout. It's cheap because it's pure protection. Whole life insurance works differently and costs 5 to 10 times more, which is why most financial planners recommend term policies for young buyers. The moment life insurance becomes truly critical is when someone depends on your income. For example, you get married, you have children, you buy a home, or you support parents. At that point, life insurance protects your family from losing the house, losing income, and facing financial instability. But remember something important. The best time to buy protection is before the risk increases. The biggest mistake people make with life insurance is simple. They wait until they need it. But by that time they're older, their health might not be perfect, and the premiums are much higher. Waiting even 5 years can increase premiums by 40 to 60%. Waiting 20 years can increase them by 400% or more. So what's the best age to buy life insurance? Not when you're married, not when you buy a house, not when you have kids. The best time is when you're young, healthy, and insurable. Because with life insurance, time isn't just money. It's the difference between paying $15 a month or $200.